All right, so that's my analysis on XBI. Let's move on to volatility in the market today. Let's go to the 1 hour chart right off the bat. We see a very similar pattern taking place right here. We have a rounded top 4 times. We have 1, 2, 3, 4 of them. And this is what I mean by once you have a strange pattern, or price is getting tight or squeezed and you're confused, you're hitting resistance levels. In this case, this red line is our 127.2 Fibonacci level. So this is a resistance level. We look for a divergence here. And what do you know? We do have a divergence. Our stochastic is making lower highs and price is making significantly higher highs. And we did see a fall way back down to the bottom of this channel. We hit the top of this channel as well as this Fibonacci resistance zone, and we were supported by the channel. Then we come up here and we make an identical pattern in my eyes. I'm a big fan of looking at reciprocals in the market, and like I said, my favorite quote is the market never repeats itself, it rhymes. And I see it rhyming here again. We have another divergence that's moving downwards. Before this dumped over here, we see a higher high set by this, and then we fell down. Over here, we have a higher high, and today, volatility, we were actually down. So I got my thesis correct yesterday that, something was wrong. It was a very small move down, but small moves can snowball very quickly. All right, so on our 30-minute chart, it looks like we've got some resistance right here, marked by 3 lows, 1, 2, 3, which is probably why price stalled out right here. If we break down below this level, I see our Fibonacci zones. This would be the next consolidation zone right here, marked by 1, 2, 3, 4. So this might, price might move down here to 77.50 in the near term future and then bounce up higher, or we could just fall down to the 78 or 61.8. So we come up here and set a double top. I marked this in a bright red bolded line. It looks like price was rejected off this level, which was our previous high at this point, and we fell lower and we were supported by this support line that I drew right here, as well as the consolidation previous lows from the last sessions. And just out of curiosity here, looking at the price, I'm interested, I just want to draw it and clone this price move right here. So we've got a high, come down, another high, and then we kind of make a, and it kind of looks like that. Let's clone that and drag it over to the current situation. And that looks pretty dang similar to me. We did not make much of a higher high, which is the only difference that I'm seeing here, but this previous pattern seems to fit extremely closely. So that's something that's interesting, I guess. Let's go to the 15-minute chart. On the 15-minute chart here, let's get rid of this clone. I just did that for fun, I guess. We have a divergence right here, high price and a higher price, and stochastic makes a high and then a lower high. We see our volume trend is trending downwards. Right there, you see it's trending downwards, which psychology means that there are fewer and fewer buyers stepping in, and we see at the end of the market that we had large bear volume, and that means that buyers are no longer supporting the price up and bears are starting to turn the tides. We can see this playing out with our CCI starting to break below 100 and move downwards. Let's go to the 5-minute. In the 5-minute, I've got several divergences. This one is actually a bullish divergence, low and then a lower low, and price makes, or a low and then a higher low, and price makes a low and a lower low. And we see this take place immediately as we blast off. However, I start to see some divergences here where we move lower, we make a high and then a lower high, and price makes a high and a higher high. And then lastly, I have one little one right here at the peak where the stochastic makes a high and a lower high, while price makes a high and then a higher high. So we see that immediately come into play as price dumps. And again, we can just see our bear volume take root right here. Let's move to the 1-minute, and that is not a pretty 1-minute picture. All right, so that's my thesis on volatility in the very near term. I guess on the hour chart, just by these blue arrows, we can see the same kind of volume, low volume, marked by a rise in bearish price action. And right here, we are getting down to very low volume areas again, and the bulls have just started to make higher volume surges than the bulls are. So short-term thesis, I think we're going to go lower. I think we're going to go below $76. Medium-term thesis and long-term thesis are the same. I think that volatility is going to continue to move up in the long term. I'm just looking for a good entry on XIV. I actually bought some VXX today, and it started paying off quite nicely towards the last minutes of the day. We can see just this enormous surge in bullish volume come into the price. I bought it down here at 13.01, I believe, and I was trying to get $13. I had 3 limit order set. I had 13.02, 13.01, and $13. My $13 didn't get filled, but my 13.02, 13.01 did. And the rationale for this is we were at 2-decade-long lows for the VIX. Now I almost never play the VIX just because it's programmed to constantly move down. However, if you catch it at the right time, you can make a nice gain. You see here we're at about $13.50 and we move up to $16. That would be a nice little 15-20% scalp right there. And yeah, so I'm actually in the VIX right now as opposed to XIV. The amount of time spent in each comparatively is about 95% to 5%, so that just kind of goes to show my sentiment towards volatility in the near-term future. Let's move on to the market, SPXL.